Back speaking with David Prentice from Brookside Energy on JustStocks this morning. David, morning.
Good morning, Andrew. How are you?
Yeah, really good, David. Big week for you in terms of this update for SWISH and the full field development plan. Just run us through some of the detail.
Yeah, so look, it's been a big week. It's been probably a pretty hectic start to the year, and I guess it all kicked off with late last year with the decision to move forward with the Flames Maroons development plan, which is underway now, but really culminating in yesterday's announcement, which is really mapping out what full field development of these SWISH reserves looks like, and looks super exciting. It's going to see us, a 16 well program kicking off early in 2025. 3 years to completely drill out the balance of these reserves that we have there in SWISH, and the growth profile in terms of both production and net income, revenue and net income is quite staggering. So some pretty fancy numbers in that announcement, and we're obviously super excited.
How would you expect to fund the development campaign?
Yeah, so look, all this is going to be funded out of working capital and cash flow. So we will do the prudent thing here and take on a modest reserve-based lending facility just to give us some flexibility there over the course of the next 3 or 4 years. But essentially, it's going to be funded out of working capital and cash flow, the cash flows that come from these wells once they come online, which has been demonstrated from what we've achieved in the past. You can see these wells pay out really quickly, and we've accumulated a lot of cash very quickly. You saw our profit numbers for the 2023 year. We're $16.5 million in net operating profit. That came on the back of 15 odd million in net operating profit for 2022. So these wells throw off a lot of cash. And if you think about it in the context of, it took us a couple of years to drill the first 4 wells, which were really the definition wells. We're now drilling 4 wells in the space of 6 months. So we're doubling the well count in a very short space of time, and then that's going to have a big impact on cash flows and the outlook towards the end of this year.
You mentioned before the Flames Maroons development plan. What's happening on site currently, David?
Yeah, so look, we're moving ahead really quickly out there, probably slightly ahead of schedule, which is obviously pleasing. And so we're sort of about halfway through the drilling component there now. The first well's down, casing cemented and in place. We then walk the rig across to the Maroons well. That's now reached TD, and we're in the process of running casing and cementing that off. So in terms of de-risking, we're about halfway through the process of the drilling side of this very ambitious project for us. So it's going very well, and it's a credit to the team and the contractors. They're working very hard out there and getting the job done for us, which is fantastic.
Just remind us, these are both oil and gas wells, are they?
Yeah, predominantly oil and natural gas liquids. So we're sort of in the 70 odd percent, probably in the mid 70 odd percent liquids content. So and that's again why we get these fantastic results in terms of the cash generating capacity of these wells, is because they're heavy liquids content.
I mean, we've discussed this before, but you still see a significant disconnect here between the asset value and your market capitalization. Must be frustrating.
No, it is. We're making progress. We're starting to see some green shoots there in terms of interest from the institutional investment community and investment banks, both here and in the United States, which is encouraging. The whole sector is trading on historically low multiples, but if you look at our peers, that probably trade on a 4 to 5 times, EBITDA multiple, we're sort of at 1.5 times. So we've got a strong balance sheet, strong cash flows, and we're trading on that very low multiple. So there's certainly an opportunity there for anybody who's casting their eye over our company and what the future looks like in terms of the fully funded program that we're undertaking now with the FMDP, and then rolling straight into in 2025 into the full field development. So it's nice to have a very clear picture for shareholders to get their mind around in terms of what the growth plans look like.
Indeed. David, good to see you this morning. Thanks for your time.
Thanks, Andrew.